Hello, everyone, and welcome. Today, we are going to go over our quarterly report for Q3. My name is Michael Lloyd, and I have our founder and managing partner, Corey Mertz, on with me today. A few weeks ago, we published the finalized report for Q3, in which we used to track all of the transaction volume across the industry for home health, home care, and hospice. And today, we're going to run through that report, go through some of the transaction volumes, go through the buyer profiles of who's conducting these transactions, and break it down by service line. We're also going to talk about the deal of the quarter and then the forecast for Q4 and beyond. So we're going to use this as an opportunity to go through the quarterly report in video format and let Corey speak to some of the graphics. So without further ado, I'd like to hand it off to Mr. Corey Mertz to go through some of the transaction volume that we saw in Q3.
All right, thank you, Michael. As Michael mentioned, I'm Corey Mertz. I'm a managing partner here at Mertz Taggart. I head up our home health and hospice division here at Mertz Taggart. And so always appropriate, always like to start off with just kind of the high level volume slide. So we track on a regular basis all transaction volume. These are transactions that have closed, not necessarily just been announced, but closed across home health, home care, and hospice. And if you look at my first slide here, I think the first thing that stands out to folks is the drop off in volume in 2022. If you look at really starting at the end of 2020 and carrying on through 2021, had pretty strong transaction volume, somewhere 40 plus transactions a quarter on average. And then 2022 hit, and things have really dropped off and have stayed pretty low. So folks, ask me all the time, Corey, what's going on? Certainly, interest rates are going up. Equity markets, have been shaken since the beginning of the year, really. Is this related to, what's going on in the broader economy? And I think the answer is to some extent, yes. Buyers have gotten more selective. I will say that. I will say some of the financial buyers have slowed down their acquisition activity, looking at other types of investments. For example, if we had taken an agency, and I'm just making numbers up right now, but if we had taken an agency to market last year and received 20 indications of interest, that same agency, this year might only get 12 indications of interest. So buyers have gotten more selective. Values have not really dropped off, believe it or not. So it's really not a function, at least in my opinion, so much of the broader economy. It's a function of sellers and quality assets entering the marketplace. So just wanted to kind of zoom out a little bit and perhaps look at this just from a little bit different perspective. And if you look at what we would consider the normal years, right? Before the pandemic hit, before we had a change in administration, 2015 to 2019, across the three verticals, we averaged right around 120 transactions a year. And then 2020 and 2021, really, if you look at starting in really the fourth quarter of 2020, we averaged almost 170 transactions a year. And then this year, we're projecting to do probably somewhere around 110. I do think we'll see a little bit of a pickup in the fourth quarter, and we'll talk about that in a second. So it really is a function of sellers that have entered the marketplace. And so what's happened over the last couple of years? Yes, number one, we've had a pandemic. A lot of folks have been burned out and have been, hastened their exits to some extent. But I think a larger driver of this that folks have kind of forgotten about a little bit is, starting in late 2020, we suspected that there would be a change in administration. Now, this is not a political statement. This is just the fact. The Biden administration, part of their agenda was to raise the capital gains tax rate. And so starting in late 2020, sellers, owners of companies were fearful that, effective January 1st, 2021, capital gains tax rates are going to go up from 20% to 40%. That was kind of the worst case scenario. And so they said, let's sell now. So we don't have to wait another year and a half to sell. So sellers that would have otherwise sold in 2022 or 2023 ended up selling in 2020 and 2021. I know that's a lot of 20s. So thanks for hanging in there with me. But that capital gains tax rate scare or nervousness has kind of carried on through 2021 to the point where you don't really hear much about it anymore. It's not to suggest that won't happen, but it's not high on the administration's agenda. So that's really been the driver of transaction volume. The spike in volume from 2020 and 2021, and then a little bit of a slowdown in 2022. But if you look at it relative to historical periods, we're just down a little bit. And that's again because sellers have really accelerated their exits. So who's buying out there? So we also track, not only what is transacting and what types of companies are transacting, home health, home care, hospice, but also who's buying. And we really try to break down the buyers by buyer type. And if you look at the graph here, it's pretty clear. The buyers that have been buying. If you look at the light green and the dark blue, those are the private equity transactions. The dark blue are the private equity platform transactions. So it's a private equity group acquiring a larger agency. And then the light green are private equity backed strategics. So these are what they consider tuck-in or add-on acquisitions. So considerable amount of the activity has been driven ultimately by private equity, but the public companies have also been very active. So they've made up the majority of between those two. They've made up the majority of the transaction volume over the last several years, really. So let's look at activity by service line. So these are the Medicare certified home health transactions. And by the way, I should mention, for those of you who are keeping track and adding these up at home, you're going to find that the sum of the transactions of the different service lines is almost always going to exceed the total number of transactions, because a lot of transactions have more than one service line. So a lot of transactions, for example, have both home health and hospice. So that's one transaction, one transaction, but also one transaction in each of the two verticals. I hope I made sense there. But just like the rest of the market, we've seen a slowdown in activity, and it's really it's a noticeable quarter-over-quarter decline. So it's not just folks that got in under the wire or perceived wire in late 2021, but we've really seen a volume drop off quarter-over-quarter. And what's driven this? It's been really the uncertainty around the proposed rule, which came out, I believe, in June. So that was, really the beginning of 2022 or late, I'm sorry, the end of the second quarter. Of course, at that time, before the proposed rule came out, we kind of had some suspicions that it may be somewhat draconian as a result of some of the perceived overspend in 2020. So the rule came out. Obviously, it's just a proposed rule at that point in time. So, and it was pretty draconian. I can't remember the numbers now, but that created a lot of uncertainty in the industry. So deals did slow down. We saw it happen in the third quarter, and even to some extent, we'll probably see a little bit of a bounce back, but still a little bit of a slow fourth quarter. But things really started to transact again, get moving again, right there at the end of the third quarter or beginning of the fourth quarter, when the final rule came out. The rule wasn't quite as draconian, at least for 2023, as everyone had initially feared. So a lot of those deals, I think, we're going to start to see closing in 2024, and I can preview a couple of those for you. Hospice, it's been a little bit of a lumpy year in total. I will say this: hospice is still very hot. A lot of private equity backed strategics, acquirers out there that have been very aggressive over the last couple of years. They're still doing acquisitions. The public companies are doing acquisitions. I will say, kind of consistent with my theme earlier, a lot of buyers are getting a little bit more disciplined, and they're becoming a little bit more risk averse in what they'll look at or what they'll chase in terms of hospice transactions. A couple of years ago, the market was so hot. There was so much money chasing hospices that, even a not profitable hospice, would sell for, 100,000 per ADC or more in some cases. Buyers were buying based on ADC. We don't see that quite as much anymore. I won't say that doesn't happen, but we are seeing most buyers are becoming more disciplined. They're really buying based more on adjusted EBITDA. I think we'll see this transaction volume kind of continue to hover in the mid-teens on a per quarter basis. I suspect Medicare Home Health will probably steal some of the hospice transaction market share as that becomes more in favor over the next couple of quarters. Home care transactions, kind of like Medicare Home Health, we've seen a little bit of a quarter over quarter drop, and this is really obviously for a different reason than Medicare Home Health. They didn't have a proposed rule they had to deal with, but this is really attributed more to the private duty home care agencies out there. So in home care, we track all non-medical home care transactions, so that includes both private duty, private pay home care, and also Medicaid and home and community-based services. So this drop-off has really been attributed to the private duty home care transaction volume, broader economy. A lot of folks that are paying for these services have had to reduce their hours, so we're feeling a little bit of some downward pressure industry-wide. Some of the industry consolidators have slowed down their acquisition activity, and that's really had an effect on the overall market. But Medicaid, home and community-based services, I think we're going to see that continue to increase and become more attractive over the next several quarters.
Great. Yeah, thanks, Corey. I appreciate that. It's good to know that although we're seeing a bit of a slowdown in volume, as a seller, that shouldn't necessarily create pessimism, that there's still a demand for quality agencies. And I think that, we're seeing that across the market. It's just the number of quality agencies hitting the market may be down a little bit. So I think that's important. And then switching gears here a little bit to the next topic today, I was going to pass it back to you to talk about the transaction of the quarter here, which I know a lot of folks have tracked, and this is kind of a bellwether for the industry here. So I wanted to, have your take on this Humana deal.
Yeah. So it's obviously hard to not call this one the transaction of the quarter in the home health and hospice world. A $2.8 billion transaction is pretty significant. What's I think also interesting is if Humana sold 60% of its hospice and personal care division to Clayton to CD&R. I don't want to screw up the name DeBillier. So that really puts a total enterprise value of about a little over $3 billion on that transaction. So significant transaction. I do think it's notable that the EBITDA multiple is a 12 times. That is not an obscene number by any stretch of the imagination. We've seen agencies, home health agencies recently, and hospices that were much smaller, that were trading for sometimes larger multiples. So we have seen some impact. I guess I'm backtracking here a little bit on transaction volume. Certainly at the higher end of the market, say over $100 million in enterprise value, those transactions have been affected to a large extent by interest rates. But in this particular case, I think it's a reasonable EBITDA multiple. I think there's more to tell about that, and we will talk more about that. at a later date. So stay tuned. But that 12 times multiple EBITDA is a very reasonable multiple. I think everyone will agree. Kind of interesting, this was Gentiva, and I'm going to lose track of the names that they've gone under now over the last few. This same company has gone under over the last several years, but it is interesting to note that they have rebranded this division back to Gentiva, and they're out doing acquisitions currently as well. And finally, it's led by David Cosby. David has been with that same organization for a number of years as a high-level CEO, industry executive. So they've got some continuity there.
Great. Yeah, those are some familiar names to everyone. So I'm excited to see where this one goes. So we appreciate you running through that. And as Corey said, I think we're going to talk a little bit more about this deal and another piece of content. So Corey, what can we expect for Q4 and beyond into 2023, which is now right around the corner for transaction volumes across the industry and transactions in general?
Yeah. So, I think we'll start off with home health, and I kind of teased this out a little bit earlier, but now that the final rule has been established, which for at least 2023 reimbursement, I think we're going to start to see a little bit of an uptick there. There's some deals that perhaps over the last 6 months have been a little bit on hold or have been slow to close. So I think we'll see a little bit of a pickup here in the fourth quarter now that the final rule has been established. How long can we expect that to continue? It's hard to predict at this point in time on the home health side because, we've got another proposed rule coming in June, and there's a lot of uncertainty around that. But for right now, buyers are comfortable. I think we've the valuation gap that may have occurred over the last few months has been closed. We'll see an uptick in transaction volume over the next quarter. And just another little bit of a teaser, we were able to close on 2 home health transactions in the fourth quarter, which one has been announced. That was Newsom Home Health. Newsom was a large Medicare home health agency based in Illinois, in the western suburbs of Chicago. They sold to Purpose Care, which is a platform portfolio company of Lorient Capital. We also were fortunate enough to sell Southwest Florida Home Care, based right here in Fort Myers. Again, a nice size home health agency that they sold to Inhabit. So congratulations to the Newsom team and the folks over at Southwest Florida Home Care. I think everyone was very happy on both sides with the transactions. HCBS, home and community-based services. I think we're going to continue to see strong demand on that front as well. We're just seeing it on the ground. More buyers are inquiring about home and community-based services, Medicaid companies. It's a great way, with home health and hospice being as hot as they've been over the last few years. It's a great way for a lot of these larger consolidators to really talk through or see through what they've talked about in establishing, the entire continuum of care at home. So we're seeing an uptick there in home community-based services. And then finally, we'll be watching the Federal Reserve interest rates. Again, I hope I didn't dismiss the impact of interest rates on transactions that are out there. Certainly, there has been some impact. And so we'll be watching the Fed, over the next several quarters. They made it very clear that they will continue to raise rates, to curb inflation. I think the big question is how fast and by how much will they be continuing to raise rates? And nobody really knows the answer to that right now.
Awesome. Yeah. Thanks, Corey. We appreciate you running through that. And like I said, if anyone has any questions, feel free to reach out to us. And I think Corey alluded to a few things that we have done in Q4. So we hope to do another one of these sessions and talk a little bit more about some deals that we are working on for Q4 and go over the industry as a whole as well, again, in the new year. So thanks everyone for listening, and reach out if you have any questions.